All right. Well, why don't we talk quickly about fair trusts? Because I know there's new tax reporting requirements for trusts that are, they've been promised for several years, and now it seems like they're really coming into effect. I believe Jan 1, 2024, for all types of trusts. And so, with that in mind, I often hear clients saying, should I? I'm gonna buy some real estate. Typically the lender will only lend to an individual personally, not to a holding company, unless that company has been around for a while and has substantial retained earnings. But they often want, for various reasons, want that corporation to be the beneficial owner, or perhaps they want the corporation to be on title. What kind of strategies do you see there? What do you recommend?
Well, I think that a lot of the requirements, I believe, are disclosure requirements. I'm going to have to look into this a little more closely if we were going to talk in depth about it. But I think one of the main reasons for some of these changes is that people were able to go back in time and declare that a property was held in trust or vice versa, so that they could just change title without having to pay land transfer tax, which is another layer of tax. So when you have a bare trust agreement, what that essentially is saying is that you're going to be on title for now, but really you're holding it in trust for somebody else. And this is another estate planning, but it's more like I said, it's sort of like a placeholder that people were using, but you could very easily go back 5 years. Like, you could just draft an agreement, which you shouldn't do unless it was actually the intention of the people to do this. But people were probably doing this, and this was in response to that. So holding property in trust as a bare trustee means you're not really the person who's supposed to own it. You really wanted this actually, so you incorporate a corporation, it buys the property in its name, but it's a bare trustee for an individual, and then later on you give it to that individual, you change title, you avoid paying land transfer tax. But the other thing that's important to note, the other pillar of tax planning was deferral. There was another pillar of that. So there was really income tax minimization, splitting, and deferral. So using strategies to defer income tax liabilities, and rollovers are one of those.